Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Please note this podcast is intended for educational purposes and should not be considered financial or investment advice, as we do not know all the variables to one's personal situation when answering a question. Before we jump into today's question, a shout out to our extraordinary YFP financial planning team that makes this segment possible. Your Financial Pharmacist offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to pay off your student loans, make the right investment decisions, or simply build a solid financial plan, we'll help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Hannah in Coal Valley, Illinois.
Hi, my name is Hannah. I'm from Coal Valley, Illinois. Today I had a question about what apps are good to use in purchasing stocks. We've heard of things such as Fidelity, Robinhood, just trying to figure out what is a good app to utilize. While I know the stock market is a gamble, I'm just curious, who's the best to go through? Who is reliable, not reliable? Who has the best turnover time? Is this something that I should invest in?
Thank you, Hannah, for submitting your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. Tim Baker, what are your thoughts?
Yeah, it's a great question, Hannah, especially with like all the news with Robinhood lately and what's been going on. I would probably challenge the premise of, kind of the stock market being a gamble or whatever. I think to kind of just back up on that, the thought is it's not without merit, but what I would say is depending on your approach to how you invest and what you're investing for, it can actually be very reliable. So a lot of clients, that we work with, they come to us and they're like, oh man, the stock market is just so all over the place. But we're really looking at, what's been happening, to the markets, that's, 6 inches in front of our face. So one of the things that we espouse is if you are investing in, kind of the long term, so, 10, 20, 30 years, the market is actually very, very predictable. And when I say it's like for a 20-year period with the S&P 500, it's never gone down. I think the average is about 6.5 or 6.7%. The best 20-year period I think was over 13%. Probably the worst 20-year period I think was just up 0.5%. Now, if you were to say, hey, Tim, like I want to invest and I want to take it out springtime of 2022, that is a risk, and you are gambling because the min and max there is down 37% all the way up to up 53%. Mm-hmm. So depending on the time frame, I would just add that to the conversation. Now, the beautiful thing about the internet and what we're seeing here lately is that investing has become more and more accessible to more and more people. So back in the day, Tim, you had to, call up your broker, or they would be calling you and they would say, hey, I want to sell you this. Or you would say, hey, broker, I want to buy 100 shares of GE or Ford or whatever. And that's because none of this could really be done on the internet. But then things like Scottrade and E-Trade and a lot of these online things have happened, and it's made it more accessible. And even before that, what's made investment more accessible to people is the kind of the creation or the invention of the mutual fund. So you don't have to buy whole shares of one particular company. So I think the question is if you're like, hey, I kind of hear about Robinhood and it's kind of piqued my interest, which is what that's done for a lot of people, but I don't want to go there. Mm-hmm. Where do I go? And I think there's a lot of different places that you can go. It could be your local bank. So there's a lot of clients that we work with that they try to stay local as best they can. So it could be a credit union, it could be a community bank that they go. It's not necessarily, they're not going to be the most tech savvy, Hannah, so they might not have an app. They'll have a website that you should be able to kind of buy and sell things. The big four that I would throw out there that a lot of people use are things like Vanguard, TD Ameritrade, Schwab, Fidelity. All of these big organizations pour a lot of resource on the consumer end product. So it just makes it easy for an investor to basically start an account, get money into that account and get it invested. I will say that one of the things that, to be aware of is beware the sales push, right? So we've had student loan refi companies that their deals for refi, Tim, are just unbelievable.
Yep.
At least they were before the pandemic. Now we're seeing a lot
They're
of
coming
more
back.
creative things. Yeah. But
Yeah.
but it's really I view that more as a loss leader, meaning let's get you in the door and let's get you banking with us, so then we can start basically grabbing a greater share of your wallet. So whether that's mortgages, checking and savings, credit cards, investments, et cetera. So that's the big push for a lot of these organizations, to just get a greater share of your wallet. So there's a lot of options out there. Another big company that's been a disruptor is Betterment. So Betterment is what we would call a kind of a prototypical robo-advisor.
Mm-hmm.
So it's less self-directed. So if you're interested in self-directed, they wouldn't be for you, but less self-directed and more kind of ask you a few questions and put you into a model. And a lot of these companies, even the Schwabs, they're looking at potentially pairing you with a robo-advisor to basically be able to charge fees on top of that. So I think the question is, where do we go? I think those would be the ones that I would start with, is, the kind of the big four there, potentially even your bank, and then go from there. But I think the beautiful thing about the internet and a lot of these companies is that you're pushing down a lot of the fees and kind of the black box mentality with regard to investing. And I think making it more transparent and accessible to, the investor out there.
It really is, Tim, incredible when you think about, with a couple clicks, what you can do today. And I think with that convenience, certainly more competition, which provides consumers with an option that hopefully there's more choice, lower fees. But also I think there's, some risk or things just to be aware of, as you've discussed, in terms of convenience can sometimes mean taking action that, otherwise, as you take a step back, consider other parts of the plan, other investing strategies you may not have otherwise taken. You hear a news story, hear a peer or colleague talk about something, and you want to jump in the game. And maybe that's an okay move. Maybe it's not necessarily the best move. I was thinking as you were talking, we did an investing webinar this past week with Joe Baker, and he showed a clip from one of the old Simpsons episodes where he was working with a broker to buy some individual stock. So on the phone, calling the broker, doing the transaction, and then he's then waiting to see on the news what that information is coming back about performance. And you just forget how far we've come in terms of the accessibility and the technology and what's really available today. So
yeah, I just imagine those printers, those really loud printers with
yes.
the striped paper, and then you tear off a lot of people are like, what the heck are you talking about? I think the other thing that would probably be worth mentioning here is that because of, and I kind of say that Apple's ruined me, and I think a lot of people, because they just make things so easy in terms of just, and I think one of the dangers here, and Robinhood has gotten into trouble with this, is if you make it very easy and accessible to do these things, sometimes you wade into waters that you should not wade into. And it's almost like gamifying it too. So I've talked about with a bunch of my clients, I don't know if I talked about on the podcast, but I've gotten a Peloton recently. So YFP Peloton, if you're a Peloton, join my group, YFP Peloton. But one of the things I really like about that is they kind of gamify working out. I'm like, I did a Peloton class because I wanted to get a badge and add that to my repertoire. But I think with things like Robinhood, where they make it almost, I wouldn't say almost like a game, but there are sometimes can be very inexperienced investors dabbling in things like options and things that they should not dabble in.
Mm-hmm.
So that's kind of the buyer beware. And we have a client, he made a comment to me. He's like, he does some of his own trading, but the overwhelming bulk of it, he's like, I need that firewall, which is you guys, just so I don't do anything stupid. And then sometimes with, again, it being super accessible, you don't have that, and you can potentially get into trouble. So I don't know, Hannah, if that goes back to the gambling thing, but I often say with investment, you want to do the opposite of how you feel. So when you feel like you want to take your investment ball and go home because the market is just tanked, that's probably, you probably want to do the opposite. You probably want to put more in. Or if the market is in fuego, you're like, I want to buy. There's typically these things work in cycles. So these type of things, sometimes it's good to have that objective third party to say, yeah, that is crazy, or at least talk through before we do anything rash. And I think some of that accessibility can be a double-edged sword.
And speaking of objective third party, I think this is a good connection back into the fee-only comprehensive financial planning services we offer at YFP Planning. If you've been wondering whether it's investing, whether it's student loans, whether it's insurance, other parts of the financial plan, what steps you might be considering, how you can prioritize those different aspects of the financial plan, we'd love to have a chance to talk with you to see if our services are a good fit for what you're looking for. You can schedule a free discovery call at yfpplanning.com and learn more information there as well. So again, Hannah, thank you so much for taking time to submit your question. We're going to be sending you a super comfy YFP t-shirt. And to those listening, we would like to have your question featured on an upcoming episode. And you can submit that question by going to yourfinancialpharmacist.com/ask YFP or send us an email at info@yourfinancialpharmacist.com. Have a great rest of your week.